I've been trading for 7 years right now. For 2 years, I was unprofitable, and for 1 year, I was break even. And only after my third year was I able to consistently make money from the markets. And my life has changed because of it. I've received over 200 pounds. I have made over $1 million trading the financial markets. And now my life has completely changed. Now, I want the same to happen to you. And so what I want to do is I'm going to give you a lot of tips that I learned along the way. And I'm going to give you in a short amount of time. Now, tip number 1 that I learned was direction over everything. If you don't have and if you don't know the direction of the market, you should not be executing. Why do I say that? Direction should be the foundation of your trading for one simple reason. It's in everything. Not only is it in everything, but it also applies to every single market, every single time frame. Because a trade is just you betting that the market is more likely to move in one direction than it is to move in the other. Yet you still think that no, you need a checklist. We'll talk about that. You need to focus on direction. This is also going to be the core foundation of this video that we're doing right now. So tip number 1 is that your strategy's foundation has to be direction. Because if it isn't, you will eventually fail because there's going to be way too many variables. But let's not get ahead of ourselves. Tip number 2, you never move your stops based on dollar amounts. Stop moving your stops to break even. It's the least profitable thing that you can do. Here's the thing. A lot of traders, when they're trading, they say, okay, I'm going to forecast. Then I'm going to wait for everything that I said was going to happen. And then you execute. And all of a sudden you go from every single thing that you did which was so right, which was I'm only focusing on exactly the process, waiting, I'm patient, and then you enter and you're focusing on the money. Oh, we're running 1 hour, I'm moving to break even. No, you don't move your stops based on what you're running. You move your stops based on market structure, always. Because think about it. What you forecasted at the end of the day was the market is likely to go in towards a key level. From the key level, I want to see a reaction, and then I execute. And now, because of some arbitrary number that fluctuates given your stop size, because your 1 hour fluctuates given your stop size, you're now moving to break even. And how many times have you been in a trade and it gets tagged out for break even and it then goes in your direction and you think, if I would have just let the stop open, or if I would have instead of moved to 0, I would have moved to minus 0.5, or worse, you could have just moved it to minus 0.2, which effectively is break even, and you would still be in the trade and you would have profited. So stop thinking, stop entering in a trade, and all of a sudden you're thinking about how much are you running and how much money you're making. You need to always keep your mind in the logical place of trading, which is price action. You need to manage based on price action and not on R or not on dollar amount. Right? So that is tip number 2. Now, just making a quick intermission here, FundaNex has just released a very new plan. For $7, you are able to get a 50K account. You just need to use code Kimmel. You can also use the link in the description. It's one of the cheapest 50K challenge with no activation fee, because all of these other prop firms have an activation fee or challenges are extremely expensive. So with that, check it out. Let's continue. Tip number 3 is that your problem is never trading psychology. It's confusion. 99% of you that are watching are not unprofitable because of trading psychology. Very rarely have I talked with someone and I've said, nope, I know your problem is trading psychology. Absolutely not. I've always noticed that the problem was a lack of confidence in the strategy. And that lack of confidence is not a psychological thing. It's a logical thing. Your mind doesn't understand why you should be executing on a specific trade. And that's why you don't trust it. We are very rational human beings. Me and you, we are very logical. When we are doing something, we want to understand why we're doing something. But then you come into trading, you want a checklist, and then when the checklist doesn't work out, you're like, oh my God, this is... And then the next trade comes and you don't execute because you didn't trust the checklist. But the problem isn't the checklist. The problem isn't trading psychology. The problem is on the fact that you were looking for the checklist to begin with when you should have been looking for a framework. And this is actually one of the rules that I have written down here, but I'm actually going to put that into this one, which is you don't need a checklist. You need a framework. You need a framework. You need to understand why you are executing on something. Every single day, I forecast exactly what I want to see happening in the market. Every single day, I look for direction. As I told you, it has to be the foundation of the market. Direction is the foundation of the market, and it has to be the foundation of your strategy. And then I look for the key level that I want to see the market manipulating to react from. This is where I'm going to be looking for my entries. The areas in which I'm looking for my entries. Why? Because now all of these traders are thinking we're going down. And eventually the market reverses. We're on the right side of the market because we understood the direction on the higher time frame, on the 4-hour and on the daily chart, and we executed as soon as the market aligned after manipulating all of the other traders out. So this is a framework. It's understanding that the market is pulling back towards a key level, trusting that key level, seeing it playing out over and over again is going to balloon your trust. And that is going to make you profitable. You will notice that once you have a framework, and that framework is based on direction, everything else will be solved. And we'll keep going because I know that I have here a couple of more that are going to pretty much tie everything together. So you don't need a checklist, you need a framework. And here's the thing. You need to stop trying to call tops and bottoms. Because once you understand direction, you understand that NASDAQ, 80% of the time, has spent on all-time high. So when I hear traders say, oh, we're at all-time high, we're due for a pullback. Why? Why? Recently, I'm recording this on the 13th of May at midnight at 11:56 p.m. The market is still going at all-time high. Tomorrow, we're going to wake up and we're probably going to see the market higher. Now, every single trader that keeps trying to call tops and bottoms, when the market is going down, they're like, no, it has to move higher, it has to move higher. They lose. The same thing for the traders that keep trying to call the tops. And there's a very good quote from the book Reminiscence of a Stock Operator. It's a very incredible book. And one of the things that it's said there, and it's written, and it's a quote from Jesse Livermore, the trader that is from Reminiscence of a Stock Operator. And it's the first eighth and the last eighth of the move are the most expensive ones. So you're always looking to call the high because you think you're going to have an amazing trade. But if you just wait for the market to give you that reversal, and you then start executing on the positions short, that's where you'll make the most amount of money. You won't make money on calling the top. You'll make money always on the bulk of the moves. And if you understand that as a trader, your life is going to change because now you understand that you don't need to try to call the top or the bottom. How many times have you entered in a short when we're at all-time high and it keeps going higher? Or the market is going down and you say, no, it's NASDAQ, eventually it has to go lower. You execute, keeps going lower. You execute, keeps going lower. You execute, keeps going lower. And all of a sudden, you've blown your account. I don't want that to happen to you. So you need to stop trying to call tops and bottoms. Now, This is possibly the one that I get the most hate from. You have full control of your trading results. What does that mean? If your strategy is based on direction and you understand exactly why you are taking a specific trade, the fact that you understand the why, you are also very easily understanding the probability of the position that you're taking. You know what an absolutely amazing trade looks like. The type of trades that work for 80 to 90% of the times. Maybe these are not the trades that have the highest risk to reward, but they are trades that you are so confident in executing consistently. But those don't appear that often, do they? But you know that when they appear, you are very confident in these positions. So think about it. If you really wanted a high strike rate, you could have it. But what would you probably be sacrificing? You'd very likely be sacrificing your risk to reward and your trade frequency. I came up with the idea of the trading trifecta. And that is that risk to reward, strike rate, trade frequency. You can pick 2, you cannot pick 3. And you'll notice that your strategy is going to be a balance of 2 out of those 3. You'll have 2, you will not have all 3 on your strategy. So this is why when you see these traders with a 1 to 10 risk to reward, and every single day they post it, and every single day they're right and they don't share so many losses that they took, run away. Those traders are not real traders, because they don't even understand that what they're doing is so blatantly obvious that they're just faking it. You have full control of your trading results. That's just what I want to say. And that is what made me gain so much confidence. Because I started focusing on direction. I started being so much more logical, because instead of following a checklist, I was following a framework. And that made me understand that I have full control of my results. Now, the 2 last ones is that every single strategy works. But let's change this now, because it's not every single strategy, it's every single framework. Now, what do I mean by that? On social media, you're constantly being shaped without you even noticing. Like right now, order flow is becoming so popular. And I have to say that the people behind making it so mainstream in the retail trading space, they're very likely good traders. But they're amazing marketers. And by the way, this is a compliment. And I'll say this. The way to get you to think about the way I want you to think is by saying that everyone else is wrong. Why do you think that so many traders start everything off as saying, oh, ICT traders are unprofitable? Because now they got your attention. They got your attention, and now they're going to try to shape you, right? So every strategy works. But there's 2 things that are always going to be important. 1, trading trifecta. No strategy can ever get away from the trading trifecta. And no strategy can get away from direction. Direction is everything in whatever strategy you're using, right? So every strategy works. And the last one that I want to say is that the retail trading space has completely changed. Funding barely matters anymore, especially now with futures prop firms around. All that matters is how much payouts you get. That's literally it. Because getting funded, anyone gets funded now full porting a challenge that doesn't have a consistency rule, right? It's all about the payouts. And then this is what you have to do. If you don't have any payouts now, your first goal is to lock in your first payout. But if you already have payouts, your next goal now is replacing your income. That's exactly how I want you to think. It's like, okay, I've unlocked the door for a payout. How can I now get to replacing my income? Because at the end of the day, you came into trading to make money. It's all about making money in trading. And with that, you have to understand that if you go way too slow, you will never get to the goal that you have in trading. You probably don't want to be on your 9 to 5 for the next 10 years, right? That's why you started trading. And so therefore, you have to start thinking in a more strategic way, in a more business kind of way than what you're doing right now. Getting to your first payout is important, but then you need to look at prop firms and at trading as a business. It has expenses, it has income coming in, and then it all becomes a math game of how profitable can you be, right? So that's pretty much what I focus on right now. Listen, the truth is, direction is everything in trading. Don't let anyone make you believe otherwise. You never move your stops based on dollars. Please stop doing that. Your problem is not trading psychology, it's just confusion. And the way you reduce confusion is by focusing on as little things possible, on a very strong foundation that comes back to direction. So that is 7 years of the most important trading advice that I've ever heard. With that being said, check out this video right here to see exactly how I trade. Check out Funded Next with this link right here. Use code KIMMEL to always get the best discount code. Peace.